Hello and happy Friday, dear fintech enthusiasts. And happy Friday it is. Uh, Personally, I do think Friday is the best day of the week and sort of a divider between, let's say, a productive or let's say efficient Monday to Thursday, and then already kind of opening up for new ideas and thoughts. Uh, and I guess the most strategic day even of the week, because if you're not using Friday wisely, exploring new ideas and thoughts and perspectives, I think down the road you'll actually find yourself a lot poorer with options and might find yourself kind of cornered in terms of options and ideas for new paths ahead. Welcome, Mark Judkowski from Zoot. Really great to have
Okay.
you here today, and Knut Magnus Jacobsen from Neobits, right?
Yeah, thanks.
And so we're talking today. I mean, it's the FinTech Strategy Talk Friday sessions again, and definitely another interesting topic and theme here for us today. And digging into the process and ways how to transform your lending process. But before and in that, of course, I mean, super interesting topics or perspectives such as simplifying the digital onboarding, optimizing credit decisioning, navigating regulatory change, and using data, public registries, and open banking to stay ahead. But perhaps you'd be kind enough to introduce yourselves. Maybe Knut, you go first.
Yeah, thanks, Ola. My name is Knut Magnus Jacobsen. I've been working with credit risk management and system building in the financial sector for the last almost 20 years.
Great.
Judkowski, similar kind of thing. Been in the business, I think I can beat Knut here, over 25 years. Although he looks a lot younger than me, I'm sure he is. I've worked in delivering solutions. I've also worked for lenders as in sort of head of credit risk. So I've seen the world from both sides.
Brilliant. Yeah, thanks. And just a reminder, I mean, of course, this FinTech Strategy Talk series is an initiative we have for the 10-year anniversary for Nordic FinTech collaboration, which we are celebrating at the Nordic FinTech Summit in Helsinki on May 15th. Well, starting on the May 14th and actually going on all the way to May 16th, but main day, May 15th. Really hope to see everyone there, and there'll be a lot of Zoot people there this year. But let's get started. What I'm very interested in hearing, and I'm sure the audience as well, is what the key business challenges that lending transformation will address. What are the key business challenges it addresses? Perhaps Knut, you could lead the way here.
Yeah, thanks, Ola. The topic that I'm mostly focused on is, of course, the onboarding process and how to make sort of profitable growth for customers. The thing is, of course, marketing and advertisement on digital platforms like Google, etc., gets more and more expensive. Customers will be less patient than before. The drop-up rates are huge on applications and forms, and they're often like we see there's a gap between what's the optimal customer experience. That's the most profitable way to sort of onboard customers, and what actually the result is on the websites of the customers. It's often based on legacy solutions and stuff that makes things less flexible and expensive, both for banks in terms of internal cost and also because of dropout rates will be super high. So that's mainly my focus: how to get more profitable growth for banks in a very competitive market.
Exactly. Yeah. Mark?
Yeah, on my side, I think the where I look at things is very much complements what Knut's doing, but then I think it goes beyond to making sure that the solutions that are delivered can not only exploit the data and the analysis that's carried out, at a point in time, but has got the flexibility and the agility to support rapid change, sort of moving into the future. So effectively looking at the spend on a solution for a digital lending process to be an investment in the future, as well as delivering a current solution.
Right. Makes all the sense. And Knut, I mean, would you share your thoughts on the customer journey that was sort of mentioned here, and yeah, anything concrete you can enlighten us on that particular topic?
Yeah, like I started my journey in credit risk management, and it was all about getting as much data as possible in order to make the best credit risk models. And when I started out, I didn't have the whole perspective. When I put up application form, I asked about everything, and I didn't have the perspective that each input field will have a marketing cost because there will be dropouts. Every input field, every stop for information will have a huge impact on marketing cost. So in banking, of course, there are on average, I think it was 70% will drop out. And you have to think of it like an store experience. If you go into a store, and the first thing they will tell you is you need to fill out a lot of forms with a lot of personal information, which you don't like to really write in the application form. And then there will be a lag because the bank often has to check the information, and they say, okay, thank you very much, then come back later, you will hear from us. 60-70% will never come back. You never go back to that store to buy anything because you're gone. And that's the same for all industries. And when you lose contact with the customer, you just doubled your marketing. You lead the cost per customer. And in a competitive market with, of course, digital channels that are super competitive and will just get more and more expensive, then that's not a sustainable solution for profitable growth. There has to be as few input fields as possible. You should never ask the customer to come back on a later occasion. Many of my clients, they use agents, of course, because they have higher conversion rates, and it's difficult to compete. But the agents also have a lot of input fields. So if the banks can create a super smooth solution, they can actually compete more with the agent in a digital environment. And I think also that customers, they will use like 1 to 2 minutes before they drop out on average. So if you don't have a 1 to 2 minutes sort of customer experience process, then you will lose money compared to other competitors in the nearest future. And we also see that the best sort of solution will be, instead of in the old days, you have the form, customer fills it out, The banks then check if you filled it out correctly and then get back to you. It costs a lot of money for the bank as well to check that information. And in Scandinavia, at least, we mostly have all the data sources available. The best performing banks are the ones that actually fetch the data and then shows it to the customer as a part of the user experience. And then they click through it. Yeah, that's correct. Thank you. Here's your application. It's filled out for you. We already fetched the information, so it's checked. So we don't have to use a lot of customer support on underwriting, and then you're done. Thank you. And the banks that has that sort of perspective and view, they have great results compared to others, and they can make shifts in the market.
Competing with agents and stop losing money. That's kind of what I hear and picked up from there. I mean, that's pretty powerful stuff.
Yeah.
Good.
So,
did you have anything, Mark, you wanted to add, or
yeah, I mean, it's effectively the role of having the right technology to actually be able to use those data sources, both ones that exist and ones that I was going to say expect coming down the line, but we don't necessarily know, so we've got to be ready for new things coming along. But we see organizations who want to do this kind of thing, but their legacy systems don't necessarily make it that easy. With modern technology, it might be straightforward to do the interfacing in the first place, but then using that data in an efficient decision process isn't necessarily straightforward with old technology. So the kind of things we're looking at is, first of all, making sure that the interfacing is straightforward. These days it typically is, but then going beyond that, being able to configure the decision processes according to the data that you've got, segmenting populations, maybe employing dynamic techniques so that if you don't need to ask a particular question, it doesn't appear on the web page. It's kind of speaking to what Knut was talking about in a dynamic way to ease that customer journey. And also using that as a means of controlling data costs. So, if you can make a decision at a relatively early stage, be that accept or decline, then you can do that there and then, rather than thinking that all the data needs to be acquired and doing that with sort of potential associated costs. So waterfalling the process, making sure that it's well designed to support that. So basically that. And I'm not sure if Knut actually said it, but effectively where the data sources are available, not just sort of bringing those in, but also through the mobile or the web pages, presenting that information to the customer, so they're confirming rather than entering. Again, improving on that customer journey.
Right. Yeah. I think I kind of got a good idea of the benefits, but you can expect to see by building this customer journey. But any examples? I mean, Knut, could you just a little bit exemplifies this further?
Yeah. We have built a new onboarding solution, for example, for Ikano Bank in Norway, where we transform them from having like a more traditional input application form. And we then fetched all the data, showed it to the customer instead, and made it super more smooth. And they actually doubled the 100% increase in the finished applications. just without that. So then half of the marketing budget cut there. And they eliminated 90% of their underwriting. Although they didn't get laid off because they need more people to do the payouts, which actually increased by 200%. Because now often the most motivated customers are the one with the biggest issues. So the ones that really doesn't really need to refinance, they are the first to jump off. So they were actually and also decreasing in losses because there are better customers coming in. We also have like the most popular mortgage bank in Norway is called Bulder Bank, which we also was engaged with. They also transformed to doing the same sort of perspective where you fetch the data, you show the customer click through really rapidly. Basically, you only have to check information and do ID checks with bank ID and leave contact information, and that's about it in Norway. And they are the most popular bank in Norway for the last at least 4 years. And they're actually increasing in a market that was stalemate, like 15 years on average on a mortgage customer in Norway. And digital solution like that will actually do a change in the market with the customer actually moving from one bank to another. Another thing that we also did in order to cut cost is that we sequentially fetch data in a smarter way. Like when you use, for example, agents, the payouts will only be like 1 to 2% of the applications. And when you fetch all the data on then 99 to 98% of applicants that will never give you any income, that's super expensive. So you need much better, like smarter ways of fetching data and structuring data in order to make it more cost effective. And then you can rather use that money on marketing or other necessary things. But you have to in order to have profitable goals, you have to check the data. You have to streamline between risk and marketing and IT, and just think of a net present value of every sort of action that the customer has to do and what the customer service is doing, what's actually profitable of doing, and how much can we just cut it to the bone. Yeah, there's huge gains to be made. Signicat had a report for a couple of years ago stated that European banks use 6 billion euros a year on applicants that never actually finish their applications. Wow. And that's customer service costs and data costs and everything, like 6 billion euros just out of
that's convincing stuff. And I mean, shifting gear a little bit, I'd like to kind of Mark, your attention and something you said earlier. So another big challenge you mentioned was the speed and cost of response to change. I mean, how could you elaborate on that a little?
Yeah, so I mean, let's start by sort of defining what we mean by change. It can be change which is enforced on the business, so regulatory. That represents a cost which essentially has to be minimized, but also change from market opportunity, be that new product or new market sectors. And in both instances, what customers, our clients, are actually looking to do is to reduce the impact of that, so that resource can be dedicated to growing the business, growing the strategy, rather on the effectively on the IT spend. So those are two key drivers of change. But in terms of the organisations that I'm thinking about, maybe a couple of use cases almost at extremes of the spectrum. One would be an organisation, typically larger banks still with legacy tech, forced to spend on lengthy delivery cycles, and very much taking resource away from growing the business, not necessarily in terms of bodies, but in terms of available investment. But also what we're seeing increasingly now is organizations that you might consider to be sort of the smaller lenders, those that have started business relatively recently, under the challenger label. But very often, when they start, they're reliant on pulling disparate solutions together and being very, very reliant on manual resource in order to be able to pull all that together and to operate. And they are now finding that success in the marketplace, but great difficulty in being able to scale the business because they're fundamentally based on heavy manual input, tying together solutions that were not necessarily designed to work with each other. And when they want to grow, when they have the opportunity to grow, the costs grow alongside, so they don't get the benefits from scale. So we're talking about designing the lending process to remove barriers to scaling the business in a way that allows them to actually achieve that growth. Now, that's driving costs out of the business without compromising on quality, and adopting a new expression I've come across relatively recently is evergreen IT strategy. So the notion that again, it's not a point solution which is being delivered, but an infrastructure and a platform that allows ongoing growth. Now, I suppose the one thing I would say is sort of as described there. To some it might appear quite scary in terms of, that sounds like a big investment, and it can be, but if it's done in the right way, it can be done in stages. So this kind of transformation doesn't have to be big bang. It can be done in such a way to address key pain points, whether that's acquiring new data sources, having some form of data gateway in place, whether that is improving the levels of automated decisioning to actually free up underwriter resource. There's numbers of ways that organisations can actually look at doing things in bite-sized chunks, but with an overall long-term strategy in mind, that's going to, at very least, allow them to be competitive. And in some instances, clients that are actually talking about giving them the potential to be disruptors within their marketplace, because they are taking that initiative and will be fleet of foot in the future compared with similar competitors that are not making that investment.
Right. Yeah. Absolutely. And Knut, I mean, happy to have a short comment and your perspective as well on that. Just mindful, perhaps a few minutes, just to give us enough time to round things up before we want to finish at 5:30.
Yeah, of course. I think it's very important to look long term. That one will need a super flexible IT system. Usually, the best solution is not to build that yourself, although the IT personnel always want to build their own solution, because it's in the environment we have now with regulators. They will have quicker changes. Data will come into play quicker. How can you sort of adapt to the regulation and take use of new data sources rapidly? When often banks decide to make changes, it takes many years to do so, but in a new environment, it could have taken them a month instead. And they will always be lagging a bit often if they have a lot of legacy, and they will lose money all the way because they will always staying a bit behind. So unless you sort of invest in a flexible solution, then yeah, you won't stay very competitive in the long term. And it's all about using the data in the onboarding, in the underwriting, continuously. It has to be, of course, cloud-based and with machine learning algorithms that you also can use and then analyze a huge, vast data material, much bigger than before, and you can actually sort of get feedback loops in the entire sort of customer and underwriting processes. And if you have a legacy system, you will never be able to use new technology in that way. But if you have a new flexible solution, you can build it in, and you can make super good decisions all the way on micro level instead of only the macro. So
right, I'm going to jump in there and just mindful. We have about 3 minutes left. I mean, quickly, both gentlemen. I mean, any other area or of lending transformation that our audience should be thinking about? Mark.
Summary of some very, very big topics. I think the one thing that springs to mind, possibly more relevant to the larger banks, is the notion of thinking about the entire customer picture. So with multiple relationships, from cards, bank accounts, mortgages, loans, that kind of thing. Looking at pulling that data together to get a single customer view and being able to make the decisioning smarter, so that ultimately, delivering a better customer experience, but also getting a greater share of wallet. How
about you, Knut?
Yeah, my advice is just to don't have a silo-based perspective within the bank. Like, it's very important to use have a red line to all the departments, and to use resources on things that make you more competitive, not generic processes. You will never gain anything from that. That should be easier and cheaper to buy in the market. And use rather resources on things that make you competitive.
Wow, good points all the way to the end. That's 30 minutes of Fintech strategy talk this Friday. Again, two things to remember. Obviously, Nordic Fintech Summit, May 15th in Helsinki. See you all there. This recording as well will be published on our digitalbankingacademy.com. So you'll find this recording on digitalbankingacademy.com. Obviously, also on the Fintech Farm LinkedIn feed. That's it, gentlemen. If people want to reach out and talk to you more, I mean, how can they do so? Mark, what's the best way of reaching you?
I guess emailing me. Can the email be made available to participants?
Yeah, you could. We could comment in the LinkedIn, but it's simple enough with you. So first name, last name at zootweb.eu, right?
That's right.
So
First name dot last name at
Yeah,
zootweb.eu.
first name dot last name, exactly. Knut, how about you? How should people get in touch with you?
Email Knut at neobits.no.
Brilliant. And yeah, any if you want to talk to me about fintech strategy talks, yeah, send me a direct message on LinkedIn, connect me on LinkedIn, and yeah, that's it for today. Thank you, gentlemen, so much. Plenty to wrap your head around, and yeah, so many points. Glad to be able to continue on this in the future, and not least at the Nordic FinTech Summit. Thank you so much. Have a great Friday and weekend ahead.
Thank
Bye
you.
now.
Thank you.